So welcome to today's presentation. My name is Peter Youssef, Senior Market Analyst at IronFX. We're going to be mixing fundamentals with technicals today. Okay, we have in front of your screens, you have the Euro USD for chart. Allow me to just resolve a little bit the chart as such, readjust it, so we get a clearer picture here. Let's also add some toolbars. Let's check with the needle thread. Okay. So we maintain, or if you prefer Euro USD, maintain the sideways motion. Yet there are some slight bullish tendencies here which are present and should be noted. But before we start, let's comment a little bit on give me a sec, on the current direction. Definitely, as long as the pair remains between the R1 and the S1, we tend to maintain a bias for a sideways motion to continue, given that for any change in the direction outlook of the pair, we would require a clear break of either the upper or lower boundary. In this case, the upper boundary is the R1 at 1.0635, while the lower boundary is the 1.0460. We note that there have been some slight bullish tendencies, which could be marked like this. You can see how there were higher truths and higher peaks, yet it seems to have some difficulty today to actually rise even higher. That tends to highlight the possibility of a sideways motion continuing. I would be noting here also that the RSI indicator has risen, and it has bounced actually on the reading of 50 and it's currently at 61, also implying the buildup of a slight bullish sentiment within the market for the pair. Should the bulls take over, I would expect the price action to rise, break the R1 1.0635, and start aiming for the R2 1.0770, the R1 which practically holds its validity on this peak here, but also on the shows 1, 2, and 3 here. On the flip side, should the bears take over, I would expect the price action to drop, break the slight upward trend line we have just shown, but also I would require for bearish outlook the pair to break the S1 1.0460. I wouldn't be satisfied with a true low than this one. No, I would require a true low than this one here, which was at the early days of October, around the 3rd to the 4th of the month. As the next big test for the bears, I would be setting the S2 1.0315. Let's have a look where that actually is based on. And we can see the continuous tests around the late days of November last year. Here, but also here and here. Pretty valid. Okay, let's readjust. Once again, sideways motion expected, yet I would be issuing here a warning for a bullish outlook and switch the sideways motion bias into a bullish outlook should the pair clearly break above the R1 1.0635, and maybe even we see the R1, once it has been broken, acting as a support line. Okay, let's have a look now at cable GBP USD. At this point, it would be interesting to note the differentials of cable against the euro, or if you prefer, how there is a difference in the reaction of the two currencies against the US dollar, we can see that GBP/USD is also in a sideways motion. That's pretty clear. But there is an absence of the bullish tendencies which are more evident in the euro against the US dollar. So practically the cable, or if you prefer the pound, is weaker than the euro and is not able to match these bullish tendencies against the USD as well. And another interesting element here which would support this notion would be practically the fact that the RSI indicator, in contrast to Euro USD, which has risen to over 60, in this case, in cable's case, it remains, or if you prefer, it continues to run along the reading of 50, implying a rather indecisive market about the pair's next leg. Once again, we tend to highlight the bias for the sideways motion to continue above the 1.2065, and that's being based practically on three elements. The first would be the sideways motion occurred over the past 1 week of the pair, and it's a pretty tight range-bound movement. The second would be the RSI indicator, which continues to run along the reading of 50. And as a third element, I would be noting practically the narrowing of the Bollinger Bands, which tends to imply low volatility and could allow the sideways motion to be maintained. Should the bears take over, for bearish outlook, I would require a clear break of the S1 1.2065 level, which provided support in the 3rd, 4th of October. Should the S1 be broken, the next possible target for the bears would be set at the S2 1.1925. While on the flip side, for bullish outlook, I would require a clear break of the R1 1.2325, as that has proven its worth around the 13th, 12th to the 13th of October. Some would argue that there is a mid-level, you can see right here among your comments. However, my opinion for the time being, I'm going to go all the way and actually expect the next big test not to be at this level right here. Let me show you what I mean. Here you go. You can see how this level was tested once, twice here, 3 times here, and here. And some would argue that there's a mid-level. That's one opinion at around the 1.2215. In my opinion, no, I wouldn't be satisfied with that. I would require more for bullish outlook here. Any case, should the bulls take over, once again, I would require a clear break of the R1 1.2325. Next possible target for the bulls would be set at 1.25. Pretty wide, I know. We're talking about 175 pips. However, cable has proven a number of times that it's maybe a little bit more volatile than other trading instruments, major trading instruments, maybe with the exception of commodity currency. And that tends to allow us to keep the corridors between the resistance and support lines pretty wide. I would also be noting here that we're not so interested in the symmetry of resistance support lines. We're more interested in actual peaks and troughs, which tend to imply as when one level was visited and found considerable resistance or support, in any way it was able to reverse the price action of the trading instrument, this time cable. On the other hand, a bearish outlook, I would adopt a bearish outlook should the price action of a cable be able to break below the S1 1.2065 and start aiming for the S2 1.1925. With no time to waste, let's move to USD/JPY. There is a slight readjustment in place here, recalibration at 150. It's a nice round figure. Here, readjusting the labels. There's no major calibration here left outside the 10 pips we changed on the first resistance line. And actually, you can see that the triangle which we had set, the bullish triangle which we had set, is still in place actually. And let me withdraw it. And replace it with a new one. Placing one corner. There you go. Please note how note how practically the price action of USD/JPY is being compressed from the one hand from the upward trend line. On the other hand, it seems to have hit the ceiling on the 150 resistance line. I think that's pretty obvious. Allow me to drill out into the daily chart. It's a very strong upward trend line here. Back to the forward chart. Price action is pretty narrow, and it's characteristic that even the support and resistance lines are also very, very narrow. The corridor between them, at least. We're talking about 113 pips on one side. So for the time being, we tend to maintain a bias for the sideways motion to continue, given the inability of the pair to clearly break the 150 yet. I would be highlighting here two elements which tend to support the notion of some bullish tendencies being embedded within the price action. The first would be the fact that the price action has been characterized by a bullish triangle, which we can see in yellow right now. The second would be the fact that the RSI indicator has risen above the reading of 50. It's actually at 60. And that may also be implying that there is a slight bullish sentiment within the market. Yet for a bullish outlook, I would require a clear break of the 150 and the price action to start aiming for the 151.45. On the other hand, should the price action break the prementioned upward trend line clearly and remain below the reading of 50, yet above the S1 148.87, we tend to maintain a bias for the sideways motion to continue. I would like to highlight here also the possibility of the sideways motion being enhanced given the extreme narrowing of the Bollinger Bands. You can see them in blue, 1, 2, 3 blue lines. And that tends to highlight exactly that volatility has contracted exceptionally, which may allow the sideways motion to be maintained. For a bearish outlook, however remote that may be, it's still a possibility, and it should be covered. In a bearish outlook, we would require USD/JPY to break the prementioned upward trend line at first. That would be a clear indication that the upward movement has been interrupted, has ended most probably. However, I would also require the pair to break below the S1 148.87 and start aiming for the 147.40. It's a wide movement, which for the time being, though, seems to be a very remote scenario. Let's have a look at the Aussie. Let's readjust the labels, first of all. In any case, we see that the sideways motion of the pair is being maintained. Let me zoom out a little bit. That's better. And we can see how it has stepped down from previous price action in September, but still in sideways motion. This time it's between the 0.64 and the 0.6285. Yes, there was a breakout, at least an attempt for a breakout, around the 9th to 10th of October. However, the price action quickly dropped once again lower and remained, or at least the main body of the price action remains between the 0.64 and the 0.6285. For the time being, we tend to maintain a bias for sideways motion to be maintained. And allow me here to draw another rectangle exactly to highlight the continuance or the possible continuance of the sideways motion. Should the bulls take over, which for the time being seems to be a very remote scenario, I wouldn't count on that so much, and I'm basing that practically on two reasons. The first reason is the fact that the price action, actually three. The first is that the fact that the price action has remained just above the S1 0.6285, while for a bullish outlook we would require clear break of the R1 0.64, which is pretty wide off. The second element is that the 20 median, the 20 moving average, which is also the median of the Bollinger Bands, has started to turn lower, but that's also happening with the 50 and the 100 moving averages in green and orange respectively. And the third element is the fact that the RSI indicator has dropped slightly below the reading of 50. It's currently at 41. It's not a clear-cut bearish outlook here or clear-cut bearish sentiment, but it still shows a predisposition to the downside for AUD/USD on behalf of the market. So more or less, should the sideways motion be interrupted, I would expect it to be to the downside rather than to the upside. And for bearish outlook, I would require the pair to clearly break the S1 0.6285 and start aiming for the 0.6165. Okay, let's have a look now at USD CAD, the other commodity currency. USD CAD, which has resurfaced practically above the 1.37. At this point, I would like to have another look at the resistance lines. Give me a sec. Let's have a look where they are heading practically. So definitely we have the first resistance line, which is based here, while the second here. And the third all the way up. I think we need to widen them a little bit. Let's make a recalibration here. One peak, second peak, and for a closer look. Third peak here. This seems better. Let's readjust. Could go even lower. This better peak. Okay, so the R1 remains unchanged at 1.3785. That's clear. The R2 now is being set higher at 1.3885. And the R3, we have moved it higher to the 1.3975. It's a bit of a distance here. Now the big question here is whether we have an upward trend line or not. It's quite questionable in my opinion. Supporters of that idea tend to highlight this. Sorry. This upward movement, which tended to intensify. But on the other hand, we have a relative stabilization, which uses the 1.37 support line as an axis with the price action rotating around it. Let's color this as well. There you go. Now, what will be stronger? On the one hand, we see higher peaks higher trough being formed, but there is a failure to mark higher peaks. In my opinion, this is an indication of a sideways motion. And I wouldn't be surprised to see the price action continuing to revolve around the S1. Should the bulls take over, I would expect the price action to rise and test, if not breach, the 1.3785. Definitely need a higher peak than this one, but I think the R1 is far more decisive given that it was also a level which provided resistance in the past. And in that case, the way is open practically for USD CAD to start aiming for the 1.3885. Should, on the other hand, the pair remain in sideways motion, we may see it actually continue to revolve around the 1.37. And in that case, it would break the pre-mentioned upward trend line, something which will become more evident in the next 24 hours. Now, should the bears take over, I would expect the price action to drop, break the 1.37 clearly, break also the pre-mentioned upward trend line, break the secondary upward trend line, and aim, if not breach, the 1.36 support base, a level which provides support here beautifully, but also resistance here and support here. So it's a quite valid level. We should keep an eye on it. One could widen it and practically also include this movement here, which had further support. I wouldn't be against that. Would be though only 10 pips lower. We would be talking about the 1.3590 here. Okay, let's have a look now at gold. Big question whether we have an interruption of the upward motion or not. It seems to be the case that we do, with the 1975 being used as an axis to rotate around. Allow me to zoom out a little bit. That's better. Let's go hunting for a new ultimate resistance line. Drilling to the daily chart. Weekly. Nope. There have been peaks here and here and here. Yet that would be too narrow. Back to the daily chart. No. 4-hour chart. Readjusting it. Setting the next target at 2080. Could be higher. 2090. $3,100. So we're discussing a new record high here. Okay, let's correct also the content of the labels. Starting with 1900 being set now as the S3. The S2 moves up to 1932. The S1 at 1975. The R1 at 2020. The R2 at 2060. And the R3 at 2100. Now the big question here is whether the bullish movement is to continue or has been interrupted. The fact that the price action has more or less breached the first upward trend line tends to imply that the upward motion was interrupted, and that was evident practically during today's Asian opening as the price of gold opened with a negative gap. There seems to be some easing of the market worries. Yet let me show you this one. The secondary upward trend line though remains intact, and we have to note here that despite gold's price opening with a negative gap during today's Asian and early European session, the price action has recovered the lost ground and seems poised to continue higher. I would be highlighting here the fact that the RSI indicator is very high. It's at 67, which means that the price action, okay, it's not at 70, but it's getting there. And that would be an indication of a clear-cut bullish sentiment on behalf of the market for gold's price. I think that gold's price is about to rise even further, and I would be highlighting this also due to the fact, note how the median of the Bollinger Bands has been providing support once, twice, 3, and this is the 4th time. So practically we're talking about a scenario where the upward motion is being maintained. All 3 major moving averages, we're talking about the 20 moving average, which is the median of the Bollinger Bands, the 50 moving average, which is the green line, but also note the orange line, which is the 100 moving average, are pointing upwards. Everything is pointing upwards here. I think we're going to be seeing gold rising even further and starting to aim for the 2020. On the other hand, should there be stabilization, we may see gold's price rising, edging a little bit higher, but correcting lower afterwards and continuing to revolve around the S1 1975. For a correction lower, don't expect much here. For a full-out bearish outlook, however improbable that may be, it's still a possibility, should be covered. I would require the precious metals price to break below the S1 1975, but also break the S2 1932. If you want to have a wider look at gold's price, do not miss out on our weekly gold report, which is prepared by the research team, and it's due to be released maybe in the next 4 to 5 hours. It's going to be an interesting report to read. Okay, let's have a look now at WTI. Zooming out. Another big question on whether the price action has breached or not its upward movement. Okay, let's start by correcting the first resistance line. It has been broken. It actually has provided even some support at some point during today's Asian session. Coloring it in green. And let's have a look at how high it could go. I'm marking this peak here. Could go a little bit higher. Also to include the spike. And that was around the last days of August last year, 29th. So we're talking about the, let's have a look. In red, 97. Resistance line. Readjusting the chart. Let's make the resistance support lines a little bit more intense so we have a better visualization. Done. Let's now also add some labels, starting with the trading instrument. Definitely we're talking about WTI here. And we are in WTS for our chart. We're adjusting, widening a little bit the chart so we get a better picture. Starting with the R3. At 97. In red. Moving now to the R2. 93.60. Let's verify that. Yep. The first resistance line would be the 90.40. First support line, which was even tested during today's Asian session, would be the 87. Second support line at 84.50. And final support line being set at 81.70. For the time being, we tend to maintain a bias for the upward motion to be maintained, as on the one hand, okay, the upward trend line was clearly tested, but it seems that it was able to hold its ground. And during today's Asian session, it allowed for WTI's price to bounce back up. Similarly, the 87 support line may have been briefly breached during today's Asian session. Yes, was able to once again push the price action of WTI higher. On the other hand, though, I would like to highlight here some tendencies for stabilization of WTI's price. And that's being based, A, by the fact that the price action is actually testing the S1 and the upward trend line we have mentioned. But also secondary, note how the RSI indicator has reached the reading of 50 and stabilized somewhat, implying a relative indecisiveness on behalf of the markets about the next leg's direction. For a bullish outlook, I would require practically a higher peak than this one. Note how there are higher shows, 1, 2, 3, 4, and higher peaks, 1, 2, 3. So the next one should be at or above the R1 90.40. Yet, on the other hand, once again, I'm highlighting here that oil bulls seem to show some fatigue. And that may allow oil's price to stabilize somewhat. Mind you that, once again, we necessitate a higher peak than this one for the bullish outlook to be maintained. Just being above the upward trend line is not enough. And I would also be noting here that there is some stabilization of the Bollinger Bands. And when I mean stabilization, I mean some flattening out here. Also, furthermore, let's not forget that the R2 highlights a high point which has not been reached for months. And that's the R2. And that would be the next target after the R1. On the other hand, should the bears take over, and we see another similar downward motion like this one, which is not something which should take you by surprise. It's a very volatile time frame for oil's price right now, both on a fundamental level as well as on a technical level. And a bearish outlook would be practically instigated should the price action break the pre-mentioned upward trend line, break the S187 clearly, and start aiming, if not even testing, the 84.50, $84.50 per barrel. So it's a very, very interesting chart, and we still have to see which way it will go. For the time being, we tend to maintain a bullish outlook, yet that's highly uncertain. Okay. Another chart which I would like to see, or at least demonstrate, would be about US stocks. We have a number of high-profile companies which are to release the earnings reports, and the market focus seems to be shifting towards the US tech sector. We're having Amazon, we're having Alphabet, we're having Google, we're having Meta, we're having Microsoft. We have a number of high-tech companies which are to release the earnings reports this week, namely on Tuesday, Wednesday, and Thursday. And at this point, it would be interesting to see how Nasdaq has been behaving. And ladies and gents, it's dropping like hell. On the other hand here, I would also highlight that there is a wide drop of 1, 2, 3, 4 days. This is the 4th day of weakening. Yet it's not so intense as, for example, if you compare it to Dow Jones. Let's have a look at that. Yeah, definitely it's more intense. But they both seem to be hitting a support line. In my opinion, for the time being, we may see the bearish tendencies being maintained. And Nasdaq is actually leading the way. Note how it's actually right now, allow me to recalibrate Nasdaq a little bit. That's valid. It's actually right now about to hit the support line, yet this one could go a little bit lower here. Let's cut this one. Let's drill into the 1 hour chart. This was the daily chart. Now we have more details. Note how intense it is. And we have one peak, next peak lower, even lower, and still dropping. I would expect the price action to drop below 14,400, maybe even today. On the flip side, it's going to be interesting to see whether the earnings reports are going to be reversing the downward motion. And at this point, we draw also a downward trend line, exactly highlighting the limitations of the downward movement. Should for any reason the downward trend line we have just drawn be broken, back to the daily chart. In this case, it could be extended even. But should that downward trend line be broken, then we would be discussing about a possible stabilization of the index or even a reversal of the downward trend line to an upward one. Yeah. That should be about it. Once again, don't forget your stock markets, a very bearish sentiment on behalf of the market. From all of us here at IronFX, best wishes for solid trading.
Everyone, welcome to another of our informative videos. Today we're going to look at balance and equity. Balance is the starting balance of your account. It basically refers to the amount of money you have in your trading account. If you deposit $1,000, your balance will be $1,000. If you open a new position, your account balance will not change until you close the position. Your balance does not include any profits or losses you might have from any open positions. If you have open positions, your balance amount depends on the losses or gains you've made once you close your trade. So basically, your balance will only change when you add more funds to your account, or when you close a position, or when you keep a position open overnight and either receive or pay swap fee. The balance amount is shown in the MT4 terminal window below the Trade tab on your MT4 client terminal. Let's also take a look at equity. Equity represents the current value of your trading account and fluctuates with every tick when looking at a trading platform on your screen. It is the sum of your account balance and all floating profits or losses from your open positions. In other words, equity refers to your balance plus any profit or loss from open positions. However, if you don't have any open positions, then your balance will be equal to your equity. Then equity amount is shown in the MT4 terminal window below the Trade tab on your client terminal. Your equity continuously fluctuates with the current market prices as long as you have open positions. As your current trades go up or down in value, your equity does the same. Thank you for watching.
Let's get started. So sorry about that. I, for some reason, could not turn on my camera. Okay, but let's just get into it. So, as per usual, a risk warning and disclaimer first. Our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. So do your own due diligence before investing any of your money. Hey, I'm Melanie, and I will be your speaker for today. I'm an investment analyst from Everest Virtual Group, who are finalists for Best FX and Equity Research in 2019 to 2021. So here's our agenda for today. We're going to understand what makes a valid trend line and trend channel, what exactly are breakouts and fakeouts, and we're going to look at some indicators to determine momentum and look at improving the probability of successful breakouts. Okay, so let's start off with trend lines. So here's what makes a valid ascending trend line. Firstly, they should be drawn from the bottom if it's an ascending line and not the top. Next, trend lines should have at least 3 significant touches, and 2 touches tend to be more coincidental, which is why we typically would recommend 3. So here are a couple of examples. Okay, you can see how significant exactly these troughs should be, or the swing lows should be, in order for them to be considered valid points on a trend line. Okay, here's another example, and here is an example of a descending trend line. So similarly to ascending, they should also have at least 3 significant touches, but for descending, they should be drawn from the top and not the bottom. Okay, here's another example. In this case, we have really nice 4 swing highs that touch our trend line. Okay, but 3 is enough. Here's another example. Okay, so here we've drawn out exactly how significant these touches need to be for it to be considered valid. And then we want to watch out for at least 3 significant touches, because then there could be a possibility that price would likely react off of that trend line again, which you can see is what happened here. Okay, so price actually reversed back to the trend line and is playing the reaction off of the 4th touch. Okay, now pretty straightforward. So let me know in the chat whether you guys think that this is a valid trend line or not. It's not. Yeah, Victor, yeah, trend here is down. Yeah, so it should be drawn on top. Yes. Okay, yeah, pretty straightforward. I think you guys have gotten it, so let's just move on. So now we're gonna look at drawing trend channels. So for trend channels, they require at least 4 significant touches. So 2 at the top, 2 at the bottom, and they don't need to be in consecutive order, like in this image here. Okay, so for example, over here, this is also consecutive, as in top, bottom, but it can also be top, top, bottom, or bottom, bottom, top, top. Yeah, so the order doesn't really matter as long as it's significant, swing highs and swing lows, and they touch your channel 4 times. Okay, this is an example of an ascending trend channel. Okay, now let's take a look at liquidity traps. Okay, so what exactly is a liquidity trap? So it's basically a situation in which monetary policy becomes ineffective in stimulating the economy, even when interest rates are near or at zero. So this occurs because people and businesses are hesitant to spend their money, even at low borrowing costs, leading to a lack of demand for goods and services. So in the context of trading, a liquidity trap can cause problems for market participants as it may lead to a decrease in market liquidity. So that basically means that it'll be more difficult for traders to enter or exit positions quickly and at their desired prices. So this can result in wider bid-ask spreads, increased volatility, and decreased market efficiency. So central banks actually try to address liquidity traps by using unconventional monetary policies. Okay, so some of these include quantitative easing. So they inject more money into the economy so that they can encourage spending. However, the impact of these policies on financial markets can be difficult to predict and may lead to unintended consequences. So here's an example of a liquidity trap. Okay, so firstly, we see price reversing at the swing high. Once price surpasses the swing high resistance, right, it clears the orders and then it drops below the resistance again. Okay, so another example here, price breaks out of the ascending trend line as well as the ascending trend channel. So it shoots out of it, clears the orders, and then at the point 1.04791, this swing high price reversed and it proceeded to drop back down. Okay? Okay, now let's combine trend lines, trend channels, support lines, pullbacks, and overlaps. Okay, here is just a checklist. Okay, so you can screenshot it if you want. I'm just gonna get rid of my face. When I was starting out with technical analysis, this checklist was really helpful for me. Yeah, but it's just a list of things to look out for. You can find this checklist and other tutorials on the forexarmy.com website as well. But basically, for this checklist, it just tells you that if you combine multiple technical analysis methods, um, your analysis would then be more accurate. Yep, I'll just type into the chat. Just forexarmy.com. Okay, maybe I'll show you guys what the website looks like as well. Okay. Mm, this Forex Factory, sorry. Forex Army, this one. Okay, so actually it's theforexarmy.com. Okay. So here you'll find some trading guides. So we have guides on Fibonacci, support and resistance. We also have trading tools that you can download for free and just implement into your MT4. Okay. Yeah. So we have Fibonacci, how to draw it correctly, support and resistance, and a couple of MT4 downloadable trading tools as well. Okay. Let's see. So yeah, this really in-depth and really easy to understand Fibonacci guides, as well as some risk management techniques. So this is really important. Support and resistance. So all of these as well. Yeah, okay. You can go and explore this website on your own. Okay, so here's another checklist. So this is specific to playing the continuation. So you can play the bounce or reversal by firstly checking whether price respects the Ichimoku. Secondly, trend line, key horizontal support or resistance levels, any key Fibonacci levels that it is near. And these are the 4 Fibonacci techniques that we use. And where's the next key level that it might go? So you fine-tune these levels by looking for confluence areas. So confluence areas tend to be a mixture of Fibonacci levels as well as horizontal levels. So like your overlaps, pullback levels, as well as pivot point levels if you do use that indicator. So when you find a couple of levels that match up at the same area, it doesn't have to be a level, it can be an area. As long as it's close together, that's fine. Yeah, then that is more confirmation that your analysis is correct and that price is likely to be attracted to that level. Okay, so in this example, I have an ascending trend channel. Okay, and price is moving within the trend channel. So in this case, I'm playing the continuation, and the continuation in this case is simply an uptrend. Okay, and when I say bounce or reversal, I'm looking at price bouncing off of the trend channel, which you see over here. Bounce off it, it moves within the trend channel. So that's why we say continuation. Okay, next, another example, but in this case, it's a downward trend channel. So same thing, we are looking at playing the continuation. Bounce or reversal refers to price bouncing off of the trend, the sides of the channel, which you can see over here. And it happens multiple times in this chart. Okay, so if you were to put your entry over here, I made a buy entry to this trend channel here, and then you did that a couple of times, it would have been really, like you would have made a lot of profit. Okay, now let's take a look at how we can play the breakout. So using the same checklist, is this the same checklist? Okay, not exactly, but looking at the same kind of indicators. Firstly, does price cross below the Ichimoku? So if price crosses below the Ichimoku, it suggests that the signal that Ichimoku is giving us is bearish. Do we have the Ichimoku momentum on our side? So is it bearish or bullish? Did price break any trend line? Basically, these three breakouts basically suggest that there is a change in trend. Okay, and then where is the next key level it could go to? Same thing over here, we are looking for confluence areas as well. Okay, playing the breakout. So first example here, I'm using a Fibonacci projection. So if you're not familiar with what a Fibonacci projection is, basically you're using the extension tool. If you're looking at TradingView, it's the Fibonacci extension tool, which has 3 points. So this is my starting, middle, and ending point. And in order to use this or to recognize that you can use it, we are looking for kind of a lightning bolt shape. So basically something like this, okay, and then it moves upwards. So, and for that, we use 3 levels, 61.8, 78.6, as well as a 100%. Okay. So I have a resistance level here. We have 2 swing highs, and then I have another, excuse me, swing high resistance here at 135.147. Okay, so from this level, price has broken out of this confluence area, this multiple swing high resistance. So it's broken out of it, so we're expecting it to continue to shoot upwards towards any one of these levels. Okay, and that's exactly what it did over here. So once price reaches our 61.8, we can expect it to continue, or once it breaks out of the 61.8, we can then expect it to continue to go towards our 78.6 level. Okay, and our 78.6 level is about the same level as the swing high resistance as well. So, yeah. Okay, now let's move on. So this is another example. In this case, we are looking at a descending trend channel. We're looking at descending trend channel firstly. Secondly, we are looking at this ascending trend line. But then we notice that price has recently broken out of this descending trend line, ascending trend line. So it's broken out of the ascending trend line, suggesting that it's gonna move downwards. Okay, so 2 points, descending trend channel breaking out of the trend line. Next, we have price moving below the Ichimoku cloud. So remember I mentioned earlier that if it moves below the Ichimoku cloud, then it's a bearish signal. So we have three indicators, graphical and indicator, a momentum indicator that tell us that price is going to be bearish. Okay, so then we can expect it to continue towards this swing low support level here. Okay, and you can see that it definitely did hit where we expected it to go. Okay, another example here. Price recently broke out of the ascending trend channel, so that's point one. Point two, price is currently at this 127.2% level. So here we have a Fibonacci extension. So, okay, let me just go to our Forex Army website. If you missed our Fibonacci series, not to worry, but that's basically where we go through all of the different techniques in detail. Mm. Hmm. Okay, we might not have that here. Okay, we have this. These are Fibonacci expansions. So they go from 0 to the negatives. And these also use that same lightning bolt shape as the projection. Okay, I think we don't talk about extensions here. That's so weird. Okay, never mind. I'll just talk about it now. So for Fibonacci extension, we are looking at the above 100 range. So for the above 100 Fibonacci levels, we are looking at 127.2 and 161.8. Okay, and how you decide whether or not you want to use this level, you look for this shape, this like V shape. Okay, in this case, it's a little bit difficult to see because it's inverted. So it's inverted tick shape. But you can just imagine a Nike tick, just an upright tick. Yeah, so as long as the head of the tick is smaller than the tail and price retraces 100% of this initial shape, then you can go ahead and use this Fibonacci tool. Okay, so in this case, we see that price recently broke out of this ascending trend channel. It's also currently breaking out of this 127.2% level, Fibonacci level. So we're expecting price, once it breaks out, we're expecting price to continue to this 161.8. Okay, so 161.8 is also in line with this swing low support level at 0.66420. Okay, so we want to try and make sure that we line up Fibonacci with graphical levels as much as possible. And you can see here that that's exactly what happened. Okay, we see price break the level, the 127.2% level, and went all the way down to 161.8, just as we expected, caught our trade, and then shot back up. Okay, here's another example. So price recently broke out of this descending trend line. Okay. So using Fibonacci extension again, the same Nike tick shape, we can see price is currently breaking out of this 127.2% level. Okay, and we're expecting it to hit our take profit here at 85.724. That's in line with the 161.8% Fibonacci extension. Okay, and you can see that's exactly what happened here as well. So for our take profit, you can see that we have this 161.8 obviously, but it's also in line once again with a swing high resistance as well. And our buy entry, as you can see here, is also an overlap level because we have price reacting off of it from a swing low and a couple of swing highs as well. Okay, so that's all for my slides. Now I'm gonna go ahead and pull out some charts. So let me know in the chat if there are any specific charts that you'd like me to analyze. Okay, I'll just go ahead and look at gold first. Mm, okay, so let's start off with the higher time frames so that we get an idea of where prices are headed, just the general direction. Okay, we have 3 swing high resistances here, and we have price moving downwards. On our daily time frame, we have a swing, we have 3 swing highs that match our descending trend, our descending trend line. Okay, so this is a valid trend line. Okay, and maybe I'll just place my swing first resistance there and my second resistance here, or rather my first support here. And okay, so a good habit is to try and see how far back you can put your support and resistance levels. So the reason for this is because you want to see, it's easier to see how many times price has reacted off the level, so you know how significant that level is. And you can see that this level is pretty significant with price reversing off of it a couple of times. Okay, next we have another swing, another second support here. Or maybe closer here. Okay, yeah. So the reason why I chose here instead of there is because here we have many swing highs and lows. Okay. So here we are playing the continuation. Now that I have my Fibonacci levels, I'm gonna go ahead and add some Fibonacci levels to support my support and resistance levels. Oh wait, this is the daily time frame. Okay, I'm gonna analyze it on either the 1 or 4 hour time frame instead. Okay, so here's the 4 hour time frame. Let's see if we have a trend channel. Okay, no, we don't. Okay, but we can kind of, do we have a trend line? Okay, also no, because we have this area here. Okay, okay, we don't have any support, any trend channels or trend lines, but we will just go ahead and add some support and resistance levels now. Okay, so this is my first support. Okay, I'm just gonna make this a dotted line because price is super close to this level. But I want to highlight it because of this swing high here. Okay, and then a resistance here. And here. Okay, now let's add some Fibonacci levels. Okay, I can see that my 50% lines up with my first resistance. 50, 70, no. This is a little bit too far, but if your 50% is, like if you look at my 50%, it's kind of about my first resistance. So that's fine. Okay, next, let's add some okay, I have my 100% lining up with my first support. Okay, but this is no longer valid because price has already broken out of the 100%. So even though it does line up with my first support, I can't use that anymore. Okay, so sometimes you do see some charts that are a little bit more difficult to find Fibonacci levels. Okay, I can see that my 100% lines up, and you can see this shape that I'm using for my projection. So I'm using a projection, as you can see my 61.8, 70.6, and 100, and also these 3 points. So I'm looking for this kind of shape here. Okay, so my 100% lines up. Okay, and again, the level, or rather the tool that I use is this one over here, the trend-based fib extension. Okay, I think that's all the levels that we have for now. Now let's go in with some indicators. So over here, we can see that maybe, okay. Yeah, so we can see that this 50% lines up nicely with my first resistance here. Okay, and we typically will trade according to the trend. So here we see that price is moving upwards. So we're likely to expect it to move upwards to our first resistance once price actually breaks out of this intermediate level. Okay, so let's pull out some levels to support this. Okay, and you can see price is moving above the Ichimoku cloud. MACD is also giving us a bullish signal. So I like to use MACD and Ichimoku because at one glance I can see exactly what the signals are. Okay. Okay. RSI isn't really telling us much. Now let me pull out my exponential and simple. So I like to use these two because not only can I check each indicator at the same time, but also I can see that when there is a crossover, that typically suggests that that the trend is reversing, or that the trend is changing. Okay, so here we can see that currently there is no crossover between the two, and in fact price is moving above our SMA, simple moving average. So it suggests that price is gonna continue moving upwards. Okay. Okay, let me know if there are any other charts you'd like me to go through or any other questions. Okay, if not, maybe I'll go ahead and analyze DXY as well. Okay, just before the inflation reports are released this coming week, I think tomorrow. Okay, so here's our weekly time frame. We see prices generally in an uptrend. Okay, but there is a slight reversal over here. Okay, let's look at our lower time frames. Okay, so earlier we talked about trend channels and the breakouts of trend channels. So this could be a possible breakout of a trend channel because we have two swing highs at the top as well as two swing lows. Okay, so this actually could be an example of a breakout as well. Okay, so we're still generally bullish on our weekly and our daily time frames. Now, if we take a look at our 4-hour time frame, you can see this uptrend over here as well. So also pretty bullish, except for this reversal here. Okay, but we typically will follow the trend. Okay, now let's get into our analysis. Okay. Even though our weekly and daily time frames give us a bullish signal, this is kind of bearish because price is breaking out of the trend line. Okay, so we'll just keep that in mind, the mix in signals, in graphical signals. Okay, and that's why we use indicators, momentum indicators, as well as Fibonacci levels and graphical as well. Okay, so this is my first resistance. Let's see if there are any levels that are closer. Okay, I'll just leave my first support here at this swing low and then change this to second support because this level is closer to my first resistance. Okay. Okay, now let's now let's look at our Fibonacci levels again. Okay, now I'm going to use my extension. So I'm looking at the above 100 levels. And you can see that my above 100 levels line up nicely with my first support and second support. Okay, so this is the V shape that I'm talking about. Okay, in this case, it's a bit inverted. If it would be like that. Okay. Okay, I have a 38.2 and 23.6 level. Okay, that both line up nicely. Okay, so we already have this confluence area here. Okay, which is why we are seeing so much resistance here at this level. Okay, I'm going to put my second resistance here as well. Okay, but we can see that price is breaking out of our first resistance. So once it breaks out of this confluence area, we'll definitely see it approach our first support and the 127. And then subsequently, once it breaks out of that, we'll see it move towards the 161.8 because the 161.8 is, or our second support is also an area of confluence. Okay, we have the 38.2 and this 161.8 along with this second support, which as I mentioned earlier is an overlap level because you swing high here, swing high here, swing low there. Okay, so this is a confluence area, which means price is likely to be attracted to that area. Okay, now let's take a look at some indicators. Okay, Ichimoku is giving us bearish. MACD is also supporting our analysis. Let's look at RSI. Okay, RSI, let's see if we have a trend line. Okay, we do have a trend line on our RSI. Okay, so it supports our bearish signal as well. Okay, stochastic. Okay, stochastic isn't telling us much. Okay, we see that price crossover, okay, which means just after price reversed. So you see this uptrend here. This is what I mean by looking for a crossover when you're looking at EMA and SMA, because a crossover would typically mean that price is likely to reverse its trend, which is what we saw here. Okay, so definitely moving downwards, especially with price moving below both of these indicators currently. So overall, all of our indicators that we've used support our analysis. Okay, let me know if you guys have any other questions or any requests. Okay, if there is nothing else. Yep, hi. Yeah, Demi Lola. Yeah, feel free to type your question in the chat.
Okay, can you hear me now? Can you hear me?
Yeah, hi.
Yeah, hi. The first resistance is a bit low,
Mhm.
like the swing low. The
Um,
swing low, first resistance,
yeah,
swing low.
is
How
what?
you
Sorry.
come to that
How did I come
swing
to the
low?
first resistance?
Yes, yes, on the swing low. I mean, resistance supposed to be at the top, not bottom.
It is kind of at the top if I just zoom in a bit. Price has recently broken under it. Can you see? And also because over here, right, at this, let me circle it here. Okay. Even though this is a support, right? So you would expect it to be a support, but price has broken under it. Okay, so once it breaks under, it becomes a pullback resistance because we're expecting price to pull back to it.
Okay,
Okay.
okay. Because okay, the reason why you called it first resistance because it's the nearest it is the nearest I mean that's the last bottom, right?
Yes. It actually, okay, so a resistance, you're right, should be like this. So like at the peak, right? So you're right.
Exactly.
But in this case, because price has passed under it, so I'm actually using this as my level of reference. Because price has
Okay, in
passed
this
under.
case, okay, you mean once the price pass under it under the let me say the previous low, it's become a resistance level.
Yeah, so this is what we call a pullback resistance. Yeah. Okay, maybe I'll pull out last week's slides to show you what I mean, because we still have a bit of time. So we covered this last week. Okay, here. Okay, so a pullback is like this. So resistance, similar to what we saw earlier, here is my support, right? Once price breaks under it, it becomes a resistance, a pullback resistance.
Okay, pullback resistance. Okay. Okay, once price break the previous low, it becomes pullback resistance.
Yeah, and then once price reverses back to that, it then becomes an overlap. So like over here in this example here, it's a pullback, and then if you look at the GIF, once it returns to that level, it becomes an overlap. So yeah,
Overlap. Okay, once it's gone too far, it become overlap.
yes. Okay,
Okay,
does that answer your question?
yes, I grabbed. At least I'll further my analysis again. But I understand what you mean by what is it called?
Okay.
There was the first resistance. The first resistance, the line you drew, which is the pullback resistance. I understand it
Yeah.
now.
But yeah, it is a little bit close to where price is at. So I understand your concern as well.
All right. Okay.
Okay. Okay. If
So
there are no other questions, yeah, then that's all for today.
okay, the second resistance. Sorry, the second resistance is is clear. It's clear to me. I mean, the first resistance should be at the peak.
Oh yeah, you can place it here as well. It's just that I prefer my resistance and support levels not so far away from where price is currently at. But yeah, it can be at the peak as well.
Okay. But why did you bring the resistance to the edge of the is it the edge? Is that the edge or neck?
Because of the swing high here.
Yes.
Yeah,
So
and because
okay,
I
so
prefer it a little bit closer to my current price. So current price is here, so I prefer it slightly lower, closer to where my current price is. But because our analysis anyway is we're expecting it to go down, so you can place it here as well. Because technically our second resistance would be our stop loss in this case, right?
okay.
So you could place it here as well. It's entirely up to you.
Okay, we are actually going for in this case you're actually going for a sell, not buy. So which means the second resistance should be the maximum stop loss.
Yes.
The first resistance, sorry.
Will be our entry, our sell entry. Oh, yeah, our sell entry. Then our first support would be our take profit. And then once price breaks that, then we can go in for another sell towards our second support. Yeah.
So how did you come about selling this chart?
Sorry.
How do you figure out sell in this chart?
How do I what? Sorry.
How do you figure out the chart? The market is going downward. How did you figure it out? I mean, it's going on the
Because
bearish.
yeah, because this ascending trend line, right? So we have an ascending trend line here, and price recently broke out of it. So it gives us a bearish signal. And then we also pulled out our indicators. So you see our MACD is giving us bearish signals. Ichimoku price is moving below the cloud. RSI it's moving in this descending trend line. Yeah, if I use the EMA and SMA, it's also moving below the the indicators. So all of our indicators and our graphical analysis all give us a bearish signal.
Okay. I mean, I can see the RSI. I can see the RSI, which is quite short for me. It is giving us a bearish, tone, and the MAC, which is the MACD, correct?
Yes.
The MACD is also giving us a bearish trend as well.
Yeah.
But for the MACD, I'm not familiar with it. The one I'm familiar with is just the MA, which is the moving average.
Yeah.
I'm just familiar with
Yeah,
the
that's
average.
just the Ichimoku and the MACD are pretty easy to use. So yeah, you can just read up on those and use them in your trading as well. Pretty easy to use.
Yeah, I will learn that as well. It's not part of I never use it for my analysis all the while because I use MA. That's what I'm being taught with. I use the moving average, but I think I will add RSI. Thank God for your analysis. I will add RSI to it. Let's continue. I will add RSI just to know my trend and to help.
Yeah.
The
Okay.
RSI is more I think it's friendly to be used.
Mm-hmm.
It's user friendly.
Yeah.
So and now I believe the RSI what is it called? The break on the chart. Sorry, I just hope I'm not just popping more question on you.
Sure.
Okay. I just want us to be on the same page. The RSI has confirmed the bearish trend. What else again confirm the bearish trend?
Okay, there are a lot of ways to use the RSI. Here I'm just looking for a trend line here. You can also look at so if you enable the lines, so the upper and lower lines, I mean here, the upper and middle bands, right? If it's above the upper band, okay, let me make it bigger. So if it's above the upper band, it's oversold. So it suggests that price is gonna drop, as you can see here. If it's below the lower band, it means it's sorry. If it's above the upper band, that means it's overbought. So we can expect it to drop. If it's below the lower band, it's oversold. So we can expect it to go up. Okay, that's another way. Yeah, another way is by looking at divergences, but we have another webinar for that, so you can stay tuned for that as well. So we'll go more in depth because I don't really have the time to go in depth right now.
Okay.
But yeah, those are the 3 ways that you can use RSI.
Okay.
Yeah. Okay.
What
That's
about
all the time that I have for you guys today. Thank you guys so much for joining me. Yeah, I hope you guys learned something and found this helpful, and I will see you guys again next Wednesday. Thanks, everyone. Bye.
all right, thank you. Bye.
Bye. Thanks, everyone.